American markets are poised to open in negative territory on Tuesday as concerns about persistent inflation outweigh optimism over President Joe Biden's statement that he could lower U.S. tariffs on Chinese imports. Futures for the Dow Industrial slipped 0.7%, while S&P 500 futures fell 1%. Stocks in Asia closed lower and European benchmarks fell midday, a day after U.S. markets started the technology-driven week. Biden, who announced new economic and trade initiatives with the region during a visit to Japan, confirmed to reporters that he plans to talk to Treasury Secretary Janet Yellen about the penalties imposed on China during the former president's tenure upon his return to Washington that were imposed on Donald Trump. "I'm talking with the secretary when I get home. We are considering it," Biden said. The comments raised optimism about the potential for easing tensions between the world's two largest economies, but not everyone was convinced. Talks of reducing tariffs on China's exports have surfaced before, and the lack of any concrete follow-through remains an element of a disappointment for markets, said Yi Junrong, market strategist at IG in Singapore. Biden joined the leaders of Japan, Australia, and India in Tokyo for the Quad Summit, or Four-Way Security Dialogue, where Biden said the world had a shared responsibility to do something to help support Ukraine's resistance to Russian aggression. The summit took place on the final day of Biden's first trip to Asia as president. European shares slipped in midday trading, with France's CAC 40 and Germany's DAX both sliding 0.9% and Britain's FTSE 100 edging down 0.2%. Investors are also watching the impact of the war in Ukraine on commodity prices and the potential impact on global economic growth from China's pandemic lockdown. Japan's benchmark Nikkei 225 lost 0.9% to 26,748.14. Australia's S&P ASX 200 slipped 0.3% to 7,128.80 and South Korea's Kospi sank 1.6% to 2,605.87. Hong Kong's Hang Seng shed 1.8% to 20,112.10, while the Shanghai Composite declined 2.4% to 3,070.93. Investors worry that the U.S. Federal Reserve may go too far in raising interest rates or act too quickly. This can slow down business activity and potentially lead to a recession. On Wednesday, investors will take a more detailed look at the Fed's decision-making process with the release of the minutes from its latest policy meeting. Tech stocks that took off during the pandemic are now bearing the brunt of selling because of their outrageous prices. Shadowing, Snap Incorporated's social media messaging platform surprised investors with a warning late Monday. Snap shares fell 30% after the CEO told employees the company would miss its quarterly growth and revenue targets. Wall Street is trying to figure out if Snap's problem is isolated or if it's a canary in a coal mine on social media. Meta Platforms, the mother of Facebook and Twitter, held its annual shareholder meeting this week, and both were fined Tuesday morning. Meta is the biggest loser in the S&P, falling 8%. Twitter fell almost 4% and Alphabet fell almost 5%. Snap's stock price went snap, crackle, pop, as it fell by over 30% in extended trading after the CEO, in a note to employees, said it would miss quarterly guidance on growth and revenues, Jeffrey Halley of Ondas said in a commentary. In pre-market trading, Snap's shares fell $6.84, nearly 31%, to $22.47, less than 2 hours before U.S. markets open. Snapslide was dragging social media down with it early Tuesday, as Facebook parent Meta tumbled almost 8% and Twitter fell almost 4%. Wall Street will receive several economic updates from the Commerce Department this week. On Thursday, they will release their gross domestic product report for the first quarter, and on Friday, they will release data on personal income and expenses for April. In energy trading, U.S. benchmark crude gained 33 cents to $110.62 a barrel in electronic trading on the New York Mercantile Exchange. It added 1 cent to $110.29 per barrel on Monday. Brent crude, the international standard for pricing, rose 38 cents to $113.60 a barrel.